Well, we have another reminder to trim your tech stock wins until Trump's cards are on the table. And look at gold stocks and European defence stocks. They're both in bull markets, up 30 to 40% respectively. My name is Jessica Amir. You're tuned in to the Market Daily this Thursday, March 27. It's great to have your company. So we've seen US stocks fall for the first time in 3 days, setting a particularly ominous tone ahead of the April 2 US tariff deadline, with possibly more downside from here. Now, what's happened is markets have taken a large step down after Trump has pledged auto industry tariffs the day before, and then overnight he's then flicked on the switch saying those tariffs could come into effect from next Wednesday. So the Nasdaq 100 fell very quickly as a result. In fact, it fell almost 2% to 1.8% to be specific. The Nasdaq 100 ETF listed on the ASX, the NDQ, is what we're displaying on the screen. That is probably going to fall today on the ASX. But basically, all this is showing is the Nasdaq 100 has, yes, it's rallied up 5.5% up off its lows of 2025. But now we are seeing heavy selling in stocks such as Nvidia and Tesla. Both of their stocks fell 5% overnight, leading the Nasdaq 100 companies selling and dragging down this key pin-up index. Basically, what we need to know is a couple things here. I just want you to pause and focus on this. The volume of trades was thin overnight and it was lower than normal. And this basically magnified the sell-off, basically amplifying the downswing. Now, this is pretty normal when there's less people trading, thus less volume. Also note that the market's fear gauge, known as the VIX, that rose 7% to a level of 18. And we also saw some investors fly into the safety of the US dollar and also buying more gold. Now, the trajectory is for the equity market, it's changed. We could be headed lower, but let's just draw focus to the fact that we're only 66 days into Trump's second term. And the key lesson here is that with Trump in power, investors really need to seriously consider trimming their wins when they're profitable and positioned for downside. Why am I saying this? Exactly like I said on March 7. Well, some investors are bracing for the worst in the short term. Not only tariffs on autos and possibly tariffs on chips, that is computer chips, but also copper. And if that happens on April 2, when reciprocal tariffs are meant to hit as well, it could also cause further turmoil. Remember that the Nasdaq 100 companies' costs are probably going to significantly rise, and that should be on investors' minds. Also keep in mind the Mag 7 or the Magnificent 7 stocks, their quarterly sell-off or their quarterly pullback is shaping up to be the worst since 2022. And the fall overnight has indeed pushed the Nasdaq 100, as we were just showing here, back into a correction, meaning it's down 10% from that all-time record high that we hit last month. Now, the bull case is there, just like what we said yesterday. We've got end of quarter rebalancing. Now, this might see the Magnificent 7 tech stocks bought up, as in buying could potentially pick up over the next couple of trading days. Why? Well, investment managers will be attempting to bring their portfolios back into alignments, i.e. buying those stocks that have fallen the most, so that they can bring their asset allocations back into alignment. That's something to consider. Now, the bear case scenario is very different, and perhaps this might be a bit repetitious for those that have been staying tuned to our commentary for some time. But the bear case is that we could potentially retest the scenario that we saw in 2018. Why? Well, remember that markets are forward-looking. We don't know what tariffs are coming down the line. And what we don't know is how much more tariffs can come. The concern is if Trump does lay tariffs on computer chips, then markets will need to adjust for basically higher costs, less profits. And that's why I'm saying that 2018 scenario could be in play. And just as a reminder, what on earth am I talking about with the 2018 scenario for those that aren't familiar? Well, we saw the Nasdaq 100 fall over 20%. So it was indeed in a bear market. And as I just said a little bit earlier, the Nasdaq 100 is now down 10% from its record all-time high. But I just would encourage you to think, if the market does see all of Trump's tariffs hit and the market will need to adjust for that, then we could potentially revisit this scenario that we're displaying on the screen, where markets have fallen 20% from their record all-time highs down to a new low. That's something to consider. We don't know if that's going to happen. We don't really know what tariffs could really come on April 2. We're just laying out a probability and a scenario that you need to pay attention to. But what we do know is this: markets don't like uncertainty, but there's a very strong case for gold and other markets offering outperformance, and that's something that you need to consider. Now, the average gold mining stock, for those that have been tracking our commentary here at Moomoo, the average gold mining stock is now up about, on average, 33%. Gold is firmly in a bull market, and the case for higher highs for gold continue to thicken. So we're just going to show a chart here on the screen. It's called GDX. Now, this is an ETF that's traded globally. We've displayed the one that's available on the ASX. You can see that it's risen thereabouts, about 33% this year. Obviously, a bull market is when we have a gain of 20%, but we're seeing gold and gold ETFs, such as the one on the screen, GDX, firmly up 33% this year. As we said, higher highs might be expected because the plot thickens for the safe haven metal to move higher. The other market in a bull market is European defence companies as well. So the average European defence stock is up about 40%. If you don't know what stock to look at in the European defence industry, just have a look at the stocks EU or EUAD ETF. The one that we've got on the screen is just an example. It's listed in the US, but that will give you exposure to the world's biggest companies in Europe that are defence beneficiaries. And I guess the thinking is that stocks in the EUAD are likely to continue to benefit from the EU ramping up defence spending. Obviously, more investment into companies in this ETF would likely result in higher revenue, and that's just another scenario for you to consider. There is always a bull market somewhere. I guess that's another key takeaway for the day. For all the stocks that we've covered today, head to the comments section or the section below on YouTube, and we'll detail hyperlinks, and they'll take you straight through to Moomoo's platform where you can find more information on the stocks we've mentioned. It's great to have your company. Stay safe, happy trading, and we'll see you for the webinar at 1 p.m. Australian Eastern Standard Time with Michael McCarthy, our CEO, and myself, covering everything you need to know about markets right now.